One of the biggest IPOs of the year, Snap, the parent of Snapchat, has had a very rough go of it since going public several months ago. They reported their second quarter of earnings this week. Again, more disappointment, more reduction of estimates from analysts, more clobbering of the stock price, which has now been almost cut in half since its peak right after the IPO. What is next? Where do we go from here? Fortunately, the jury really is still out on whether Snapchat is going to stumble and fail and become what Twitter has unfortunately become, where there was tremendous excitement and optimism when the company went public. The results have simply not delivered on that, and the stock is hanging around multi-year lows for Twitter. Is this going to happen to Snapchat, or will Snapchat pick itself up like Facebook did after its IPO? And you go back to Facebook, remember that even Facebook, after the IPO, got cut in half from the stock price of the IPO and then came roaring back from there. Is that what will happen to Snapchat? And jury is still out. What we do know is that Snapchat ultimately, like all stocks, will trade at something on the order of 15 to 25 times earnings. Valuation matters here. And one of the good news for the Snapchat bulls is that the company is now much less expensive than it was when it went public. So Snapchat actually has to not be as big as it needed to be when it was in the mid-20s to justify its valuation. Now it has about a $15 billion valuation. Before it had about a $30 billion valuation, so less performance needed over the long haul. But the key drivers for Snapchat over the next several quarters will be user growth. Can they continue to grow users and engagement per user within the US and Europe, their core markets? And can they continue to grow revenue? And if either of those stall, and both of them are growing at rates that are a disappointment relative to expectations prior to the IPO, if either of those stall, your downside scenario really is where Twitter has gone, which is about 4 times current year revenue. Right now, Snap is trading at about 15 times current year revenue. Presumably, they will grow their revenue solidly over the next year or two. But even if they double each year, they're still trading at 4 times 2 years out revenue. So things have to go very well. But if they do, a lot of Wall Street analysts came out this week and pointed out that if things do go well, there is still plenty of upside. In fact, more than there was back at the IPO. So bottom line is, jury's still out on Snap, but not an encouraging quarter. The optimists say, hey, finally, all the bad news in the stock. Estimates are low enough that we can beat going forward. We will see.